Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. Pick up the phone, give us a call, and let us know what you are thinking now that we're well into the spring buying season here in San Bernardino and Riverside. Say hey to all our friends out there, people who listen to the show on a weekly basis or just tuning in for the first time. What we try to do is bring you some guests that talk about real estate and mortgages, so that you get a better idea of what you're getting into or what you need to get out of in both of those areas. There is a lot going on always in our markets. Why? Because rates change all the time. And depending on what happens in the marketplaces, whether it's in the general marketplace of the economy here and abroad, or whether it's in your local city or area, things that affect you, your business, your employment, your credit score, your debt that you're taking on or about to get rid of if, in fact, you're paying off your mortgage. All things that you need to consider when we talk about real estate, when we talk about mortgages. Well, those answers, I don't have all those answers. Let's face it, I'm not like a magician out here that can pull it out of a hat. What I do have is great guests come on the show each and every week from the different areas of the country that Malibu Funding, who is the company that sponsors the show each and every week. They have offices in 10 different states. And, of course, we try to bring you a national perspective to the show as well as deal with local issues. Local issues this week consist of what is happening with our economy. Seems to be taking off again, which is a bit unexpected from me. So I have to mea culpa one more time. Yes, I was wrong. And what we're seeing is the growth rate in the GDP this last quarter, the first quarter of Q19 was accelerated to over 3%. I think it's 3.25% right now, and it may be revised upward again. That tells me, and by the articles that I'm also reading, that if you're in the job market and you are looking for a job and you have skills that are in demand, you have a much better opportunity right now to get the best salary in the marketplace. If you're in computer programming, if you're in healthcare, if you're in anything having to do with sales at either, let me get this right, Google or Oracle, or what's another one, Amazon, you are actually in a very good position, or if you want to get into those positions, to demand the highest salary they have available in that particular field. Now, those are some growth areas. Those are areas where jobs are needed. Certainly, locally at the store that you shop, or the company that you go to service your computer, or things that you do online as well as every day out in the marketplace. Yeah, all those jobs are still available. But to get a good job, and the reason I'm bringing it up is you need to have a good job in order so that you can get a loan. I know real estate prices are high there. We're going to talk to a couple of people from different lenders today about some of the programs which may not affect you, but can affect you. For instance, you're a self-employed person. You're somebody who works cash jobs. You're an independent contractor. There's all kinds of ways that you can earn a living nowadays, especially with the expanding economy and the different types of jobs. For instance, 10 years ago, you did not see a thing called Orange Theory. Now, if anybody out there who exercises, you know what that is. It's that high-intensity training program that is offered now all over the place. Or let's see, what's another one? Typical yogurt shop, typical yoga studio, typical any kind of a niche product or service that's out there, which are now plentiful in any area, any mall, any side street mall, any kind of a strip mall. You're going to see businesses that you probably didn't see 10 years ago. And why is that? Because of the fact that this economy is growing and has been growing now. I guess it's almost 9 years. Slow during the Obama years, but steady. Building a fortress of strong economic indicators across all sectors of the economy. And then, of course, when current administration got in, it really took off. And I'm not quite sure how much any of these politicians have to do with it, but historically speaking, that is what's happening. And so I think if you're, again, out there and you're looking for work or you have a job, you have a great opportunity to get a high salary. You have a great opportunity to go into your particular boss or your however it works at your particular place of business and ask for more money. It's easier to give you more money than to train your replacement. Trust me, I know. I'm in business. I deal with a lot of people all the time. And in our particular business, and that is the mortgage business, I am a cog in a giant wheel. And in terms of trying to get things accomplished, you need competent, well-trained people. So if you're in a business that you have that in your job title, you probably could make more money or ask for more money because the demand on skilled labor in high stress or high functioning positions is high. And if that particular job wants to keep you around because it's cheaper to give you another $2 an hour raise or whatever the heck it is that you're asking for on your salary, it probably would be best for the company to do that, keep you happy, and then again, making sure that you stay there and be productive. Inasmuch as that is part of what we've been talking about here on the show today, just hit briefly, Congress is working its way through a couple of other items about your retirement. We talked about retirement about 2 or 3 weeks ago. Wasn't that it, Daryl? About 3 or 4 weeks ago, maybe?
Yeah, we hit that pretty hard.
Yeah, exactly. So one of the things about when you're talking to your employer about a raise or other benefits that you might be able to get, working its way through Congress quietly, both in the House and the Senate, with Republican and Democrat backing, are several new ideas incorporated into a couple of different laws, which would help retirement, which would help people save for retirement.
The concept of a pension is so far gone these days that there's got to be something, 401k fading away.
It's interesting that you say that because they're trying to open up 401ks to small businesses and have them have the same advantages of large companies controlling the 401k portfolios, i.e. if my company that I work for, and they probably have 50 or 60 different type of people working for them from 1099 to W-2, if they were able to join a larger company with 401k access and then also have advantage to be able to invest the 401k money with the larger entity, the returns would be better. And they're trying to make this legal. Now, I understand that if you're not in a company that has a 401k or if you're not in a company that can do this. Anyway, the law is going to make it easier for companies the size of a Malibu Funding or maybe your business to get into this. They're trying to increase the ability of your employer to offer those kind of benefits because benefits is another way by which you can maybe not get a raise, but maybe more benefits. And it used to be, remember, Daryl, when benefits were just part of the normal heyday of what we were doing in business to hire people?
Oh, sure, of course. The benefits package was, 20% of the compensation at one point.
Right, exactly. And I think that a lot of people don't understand that is still part of your negotiating ability. And of course, all of this is about making more or being able to satisfy some of the requirements of the ability to repay rule, i.e. if you make more or if your benefits are big and you get a payout if you leave or it's an incentive to stay at the company, thus you have 30 years to pay off your mortgage, that's a good thing because that's what lenders are looking for when they're looking for you to go out there and get a loan. And many of us in the industry always want to be able to say, look, you can make more. You should be making this. It's an ability that you have to explore, especially in an expanding economy. The more you make, the more you can borrow. The more you can borrow, the better house you can get. And in any market, the better house that you can get is what everybody wants. I want a house with 2 bedrooms instead of 1. I want a house with a pool instead of without a pool. I want new storm windows rather than none. I want a new roof rather than none. All of these things are dependent upon the price that you pay for the property. So it's really important that obviously you make as much money as you can. I'm Jeff Barton. I'm your host here for The Mortgage Voice. I'm on each and every week. Thanks for tuning in.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. Pick up the phone, give us a call, ask us a question, specific or in general. In either case, if I don't have the answer, I'll find one for you. We have a lot of great guests that come on the show each and every week that know way more about loans than I do and way more about real estate than I do. So what we try to do, as you all know, is hit all the high points and then get into some of the nitty-gritty. We've talked about employment and retirement and all things in between, because when you own real estate, that's what you try to do. You use that property to build equity and save for your retirement. And that's the way probably 50% of the people do it. Everybody else who doesn't do it, they're in trouble because they're going to live on their Social Security. So what we're going to offer you today is some solutions to maybe a non-traditional type loan. Maybe you need some additional products in the marketplace to be able to satisfy what you do and how you do it. Anyway, with us again today, Kim Soash from Homebridge Mortgage. Kim, how are you?
I'm great. Thank you for having me on the show today, Jeff.
Thanks, Kim, and thanks very much. Kim has been in this business for a number of years. So I mumbled that. No, it's okay. The reason I do that is because it's great to have you on the show. And because of your experience, you can offer some real solutions to people who really are searching around right now. As you know, rates have gone down a little bit. They're pretty good, right?
Yeah, rates are pretty good right now. And I think that lending guidelines have loosened up a little bit. So some of the loosened guidelines are offering some new opportunities for folks who want to try to qualify in a non-traditional way, maybe not using their tax returns to qualify for a loan.
That's good. Give us, I know that you've been on the show recently, but I wanted you back because the programs that you talked about are so attractive and so encouraging for a lot of buyers. Just let's give a recap of what we talked about previously and then maybe get into something else.
Well, I know that traditionally people use their tax returns to qualify for a loan, but some people who are self-employed, claim different ways, and
right.
And using their tax returns doesn't make a lot of sense, or sometimes prevents them from qualifying that way. And so there are different options where they can. Sometimes they can use their tax returns, but just use 1 year because maybe previous year wasn't great, but this most recent year was, and so we'll only use that year and not have to average them out. Sometimes they can qualify using bank statements. They can use 12 or 24 months bank statements that are either from their personal account or from a business account or even from multiple business accounts. So maybe they have, 4 or 5 business accounts and, can't qualify just using the one, but could qualify using, a few or all of them.
Right.
And then there's another option for people that own investment properties, non-owner occupied properties, where they don't use tax returns or bank statements at all and just qualify on the rental income of the property. So as long as the rental income is more than the principal, the interest, and tax and insurance payments combined, then that's it. Let's call it a day. The borrower qualifies that the rent is covering the mortgage payment.
Specifically, can you tell us the way you calculate that? Meaning, okay, so you're looking at principal, interest, taxes, and insurance. That's a number, right? All of those things add up to be something. And then the rent from the property has to cover all that? How does that work?
Yeah, so let's say that the principal, the interest, the taxes, and the insurance are $2,500.
Okay.
If you add them all up, if you add up the, all of those payments individually, and if they have HOA, if it's a condo, that has to be included in that. So it's actually PITIA, principal, interest, tax, insurance, and association dues.
Okay.
So if you add them all up, say that's $2,500. But say they can rent that property for $2,700 or $2,600 or $2,550, as long as the rent is more than the principal, interest, tax, and insurance, then that's all that the borrower needs to do to qualify. So there's no debt ratio, there's no expenses to worry about that the business pays this or that, or they've got car payments. We don't even look at those things.
Okay.
We just want to know that the rent covers the mortgage payment.
Okay, so that's an existing renter. What if you're buying a property and wanting to rent it out? Do you take a rental survey, or how does that work, or does it work?
Yeah, no, absolutely. We do these all the time.
Okay.
So what you would do is the appraisal that you order on the property to determine its value, you would also ask for a rent survey. And so the rent survey will tell you what the market rent is, and as long as the market rent is more than what the principal, interest, tax, and insurance is, then the borrower would qualify.
So this is a great vehicle for someone who wants to get into owning other properties, but at the same time does not have a down payment necessarily to be able to qualify for a conventional loan.
Well, they would still need to have a down payment, I guess. If it's a purchase, they would need to, this will do 80% loan to value. So
Glad you told me.
Still have 20% down.
Okay, that's good to know. No, because the reason I was asking is because I was like, oh, this is like, no income documentation. You're just getting a rent survey and you can buy a property. That's not what it is at all.
Well, it kind of is no income documentation other than down payment. But if it were a refinance, you wouldn't need to have bank statements and to show where your deposit was coming from. And if it was a cash out refinance, the cash out can be used to satisfy the reserve requirement. So if this was up to $1 million loan, would need to have 3 months of principal, interest, tax, and insurance for reserves, and then 1 month for each additional financed property. But if they had cash out, that could be used to satisfy that reserve requirement.
How
so, kind of coming in with nothing.
No, I love the program. I mean, I think it's really good, and I know that when you had a webinar over at Malibu, where I work, it was good because people liked it. They but they really saw the benefits that they could provide to the borrower based on, just having the property qualify, really, which is, what's it going to rent for?
Right. And it's nice to have options, to not have be turned down because you're not fitting in the box of one lender. It's nice to have options that you can take your borrower and provide them with some alternative that would help them to qualify.
Now, this is a non-owner occupied loan, yes?
The investor cash flow, where you are using rent to cover the mortgage payment, that is for investors only. It's called investor cash flow because it's based on it's a non-owner property and it's based on the rental income. But the full doc, using 1-year tax returns or the 12 or 24 months bank statements, that could be for owner-occupied, and sometimes, again, you don't want to use your tax returns, but, the deposits coming into the bank statements is very strong, and so, qualify on that income, qualify on the deposits going into the bank statements.
Hey, Kim, you want to shout out your phone number? I want to have people contact you directly if you have any questions about this program. Call Kim. Kim, if you could do that, it would be great.
Oh, of course. It's 818-970-4016. And it's Kim Soash, Soash.
Great. Thank you very much for doing that. I know this is a particular subject because, as I said earlier, we've been talking about retirement and we've been talking about, how do you get into a market and how people in an expanding economy can make more money. One of the ways to do that is through a program like this. And I don't know, how long has this program been around?
It's probably been going on about 1.5 years, maybe going on 2 years now, and it's just gaining steam. When I first was introducing this product, it was kind of a here and there sort of thing, and then it became about 20 to 30% of a person's business, and I would say it's almost 50% of what I do now.
Wow!
It's just really gotten legs. It's become very, very popular. In fact, sometimes with people that have multiple properties, this investor cash flow, you could do up to 23 properties.
Wow.
So maybe they just don't want to hassle with the tax returns. They just want to do something easy. And I found that to be with people, even with excellent credit and tax returns. They just don't want to wheel in a wheelbarrow full of documents.
Well, you hit the nail on the head. I'm going to talk about that in a later segment, just about the difficulties of trying to maintain steam through the process, which is not easy. Kim, thanks very much for being on the show. I really appreciate it.
Thank you for having me, Jeff. Anytime.
Okay, and that's Kim Soash from Homebridge Mortgage. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your host for the Las Vegas Real Estate Show. And today I'm on the Mortgage Voice here in San Bernardino and Riverside. I always get that confused. And anybody who's listened to the show long enough knows that at the end of each sign-off of each section, I always get confused because I do both shows now, and I always get confused about which one is which. But today we're the Mortgage Voice, San Bernardino, Riverside, and our great friends up in Tahoe at K-Tahoe. I appreciate those listeners as well. And we're looking to add new affiliates around the country so that we can bring the information to you, the public, and also the borrowers out there, people who need to know what's in the marketplace for their loan that they want to get because they want to get that house. And right now is a great time to do that. We're in the spring buying season, right before we get to the summer hotter seasons, both in temperature and the way borrowers and buyers seem to be coming out of the woodwork to buy everything in sight. Economy's doing well, GDP is up. And I wanted to bring on a guy that we've only had on the show one time, Richard Impietro from Caliber Mortgage, to talk about programs that they have offered and offering to all of the borrowers out there. Richard, how are you?
Hey, I'm good. Hey, Jeff, it's Mortgage Solutions. Just as a.
Why did I say Caliber?
Don't know.
I have no idea. It's more.
I have worked for Caliber in the past, so that's.
Oh, no, you know what? I must have looked at it. Anyway, your experience exceeds any brokerage that you work for, any bank that you work for, and offering to our listening audience that experience is well appreciated. So give us an idea of what's happening at Mortgage Solutions and how you guys are offering some terrific products.
Sure. I think in today's market, in fact, I just read in the Chrisman blog, if anybody's aware of that was sent out yesterday, day before yesterday. It talked about the number of borrowers now that seemingly are having more challenges from a credit standpoint. It seems like the easy loans are not so frequent as they had been in the past, possibly, and more borrowers are having more challenges with their credit scores, and or with down payment and things of that nature. And therein lies our particular expertise and niche is in those products, which are government loans. Since, as we all know, in the days gone by, the hard money loans don't exist anymore for the most part. So you have to go with an FHA loan if you have a FICO score as low as 500. Or in the case of a VA loan, there is no minimum FICO score.
Right.
So, those are options out there that more and more borrowers seemingly need to have access to. And that includes things like manufactured homes, people that need a manual underwrite on their loan because the automated underwriting does not give them an approved eligible. So therefore, you have to manually underwrite it. So in those cases, FHA provides a solution. 3.5% down, 500 FICO score, cash out up to 85%, with a low FICO down to 500 still. Some unique features that you're just not going to get with Fannie and Freddie.
No, I agree with that. And the competition then for any of these type of loans would be that non-QM product, which is more expensive, right?
In some cases, you'll find that most non-QM products, Jeff, will not go to the lower FICOs. What they will do is they'll want, in the traditional non-QM, bank statements, asset-based lending, things of that nature, they want a little bit higher FICO score. In certainly probably more money down than 3.5% in some cases.
Yeah.
So, yeah, non-QM has become very popular, but we're not finding them displacing the need yet for FHA and these borrowers that sometimes have lesser credit scores than most cases below 620 and more often than not below 580.
Yeah, I think the idea that getting back to those borrowers who would prefer being in a government loan but haven't got the FICO scores to go conventional, that's what we're talking about in terms of providing solutions to those borrowers, right?
Exactly. They may not have the FICO score or the down payment.
Right, exactly. Now, with the down payment, discuss how that down payment can be gotten. Is it something that the borrower has to have in the bank account and in the bank account for 6 months or a year? How does that work?
No, 30 days, we'll get a bank statement and verify that the funds are indeed theirs. Now, in the case of FHA, you could get a gift as well.
I see.
Which is also a nice benefit. So you know, or in some cases, if it's an FHA approved down payment assistance program, you could get 100% financing with these loans.
So you work with CalHAFA and the like on their particular down payment assistance program?
Yes. Depending upon the municipality, we may or may not be approved with that particular government entity, but if it's an FHA approved entity, then absolutely. It's no problem. They could take care of that with the down payment assistance program. If the FICO score, I should note, is below 580 with FHA, they still want 10% down.
I see. Okay. Well, that makes some sense. All right. And do you find that as an impediment in this market where the real estate prices are going up so fast?
To some extent, yeah.
Mm-hmm.
I mean, unless they have a relative that would help them qualify with the gift, then that's overcomable. But if they're on their own and they got less than 580, they do need to have 10%. So the down payment assistance in that case won't be a benefit to them.
Tell me on the limits of the FHA money. How high does it go? How much money can you get? If you put in your own money, can you up that limit? How does that work?
You're limited to the high balance limits, the county limits.
Okay.
Which in the case of LA County is, 725, I believe it is, 721. So it's pretty high.
Do you know about San Bernardino and Riverside where we're broadcasting, or up in Tahoe we're also broadcasting? Do you happen to off the top of your head?
They're still at the standard conforming amount. They don't really have a high balance amount
I see.
In San Bernardino and Riverside at this point. So they're still limited to that. In the case of VA, as you may know, you can go to 100% financing on those transactions.
Right.
Those are the most aggressive of all the loans out there. So if you work with any veterans, any of your listeners, no minimum FICOs, 100% financing, and very, very willing to make accommodations for the vets to try and get them in a home as well, or even more so a debt consolidation loan, which is very popular nowadays.
Oh, absolutely. Tell me, in your experience, do you find FHA is a better solution for somebody out there with low FICO score than to try to go with a non-QM, or is it really borrower specific?
I think it's going to be borrower specific, but in most cases, FHA is oftentimes the only option.
I see, right.
Unless you go down the road of hard money,
Mm-hmm.
which you still can find out there, but it's not the same as the days gone by, like I said, where you had plenty of options with those things. But they're seemingly two fairly different sort of products in terms of what non-QM provides to the borrowers versus what FHA provides. FHA will allow you to, as I say, do that cash out to 85%, the only ones that go that high, and then they will also allow you to get in the home with 3.5% down. And once your credit approves, you can also refinance later on and get out of the mortgage insurance.
No, I like FHA. I just, in my experience in the last year or so, there's so much buzz about this other thing. People have forgotten a little bit about what FHA provides and how even though you're paying mortgage insurance premium, you have an insured loan. That's a little bit different than necessarily these non-QM stuff.
Exactly. I mean, it does meet the qualified mortgage rule. You're exactly right about that, Jeff. So we do have these loans are sold to the agencies, in this case, HUD. And they're pulled in Ginnie Mae securities, sometimes with VAs. So, yeah, they're secondary market loans, not non-QM loans.
Exactly. Hey, Richard, could you shout out your phone number for people who have questions or want to talk to you about the products itself?
Sure. It's 949-287-9525, and I'm based here in Orange County.
Great. Thank you very much for coming on the show. I really appreciate it. Once again, this is Richard Impietro from Mortgage Solutions. Thanks, Richard, for coming on the show.
My pleasure. Thank you, Jeff. Have a good day.
Thank you, you too. And I'm Jeff Barton, voice for the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. Pick up the phone. Give us a call. Write the phone number down. Ask questions later. Call us anytime. We are here to be able to help you. I know there's a lot of stuff going on in the mortgage marketplace as well as the real estate marketplace, trying to figure out what's happening and what's going on. You need an expert or at least somebody you can call to ask a question. That's what we're here for. That's what the show's for. We bring great guests. We bring guests who can provide answers before you even know their questions, and that's really what this is about. We bring people from all walks of the business, whether it's in the mortgage industry, the real estate industry, whether it's in escrow, appraisals, whether anything that has to do with home inspections, problems with income, anything that you can think about that may prevent or has prevented you from getting a mortgage in the past, that's what we try to deal with. One of the solution providers for us on the show, been on the show several times, is Gail Whiting from Capella Mortgage out in Las Vegas, Nevada. She joins us now. Thank you, Gail.
Thank you.
Thanks for coming on the show and, being available for us when we need answers, especially with a product that Capella offers. What are you guys doing now? And are you still offering the same type of solutions to borrowers that you have been traditionally?
Well, we always, Capella's known for their hard money loans.
Right.
Hard money being commercial, residential, but we also got into, or I specifically for Capella do the non-QM,
okay,
which is not a government loan, not a Fannie, not an FHA, not VA, is the non-QM. Those loans are just for people who may have had a credit event that prevents them from the prime Govy loans.
Right.
Particularly, a lot of self-employed people, they have alternative methods other than the tax returns of proving your income. And because lenders are confident in the market, you still have to prove some form of income, whether that be 12-month bank statements, 24-month bank statements, year-to-date profit and loss from your CPA or tax preparer.
Hey, Gail, can I ask you a question? We have a bit of a audio issue here. Is there a way by, I don't know if you're speaking on a Bluetooth or how that's working or whether it's on a speaker, but is there any solution you can provide? Maybe, just back away from the speaker a little bit. I don't know.
Yeah. How's this?
It's better. Yeah, it's better. Thank you very much. And thanks for doing that. Obviously, the solutions you're talking about affect a lot of borrowers in Las Vegas. How is the market out there?
The market is a little bit shifting more towards the buyer's market.
Okay.
Now, where sellers, who are selling their properties, usually a seller would receive 2, 3, 4, 5 offers in a week.
Yeah, that's right.
I think the sellers are at a very good learning that they should be in this price range, and buyers are seeing the opportunities. Sellers are giving some concessions. I've actually seen on the last 2 files to help the borrower with some closing costs. So I think before, what we were in was for sure a seller's market. Whatever the seller said,
you had to do, right, exactly. No contingency offers, close in 10 days, all that stuff.
All that stuff.
Yep.
So now we're seeing, that it's shifting more toward a buyer's market a little bit. So they're getting, some more dollars lately.
Now, are you still seeing the price increases of 10% or so on real estate year to year?
I think that this particular March, this particular year, I think we're evening out. Because, look, my motto is home prices are commensurate with the job market,
right,
and the wage.
Yep, I agree.
And that's the way it should be.
Right, I agree. Yep.
So as wages go up, home prices will go up. So if you see that wages are going to go up, or that the job market remains strong, whichever way you believe, you'll buy a house. And it's been that, jobs have significantly increased.
Yes, they have.
And people were feeling confident, and there were a lot of buyers, more so than there were houses, which to me was kind of a little bit uneven, but we were playing catch-up.
Oh, yeah. I mean, we had 10 years worth of down to catch up to where we've got now, which is finally prices have reached or surpassed where they were back, at that time.
Yes, they have. So I think it's, I like the balanced situation that we're in.
Right. Do you find more buyers coming from out of state or California than you get locally, or is that mix still, 60-40 or 70-30?
What was that question? I'm sorry.
Where are the buyers coming from? California, out of state, or are they mostly from, right there in Las Vegas?
Oh, I would say 2 or 3 out of 10 might be from out of state.
Oh, I see. Okay. I thought it was higher.
Particularly California.
Okay.
Because those Californians.
Well, you can buy so much more in Vegas than you can here. You could sell your house here, make a pretty penny, go to Vegas, buy cash. I mean, right?
And have a lot of money left.
And exactly. That's what I want to do. I want to have all my money in my pocket and buy a nice home in Vegas, have entertainment options all over the place, as well as a nice lifestyle.
Oh, yeah. I've had several borrowers like that. In fact, one lady, just in particular, I got her a nice townhouse. Oh, she was just in heaven over it.
What'd she pay for it?
At the time, $220.
Oh boy, that's nice.
And I looked at, because of course I have to look at the house she sold, and I said, really? So your 1,600 square foot home that your mother left you and your brother, this is the address? And she said, yes. And I said, you sold it for $899? She said, yes.
Yeah, so you're ready to exactly. That's nice.
From the 1960s, and I was like, really? And I'm like, I can't believe it. And she got her townhouse was. It was 3 bedrooms, living room and a den, the kitchen, upstairs, downstairs, garage.
Nice. End unit?
It was almost 1,700 square feet.
Yeah, that's
and
nice.
All her family was coming, and she goes, they are just going to not believe. She was living in a nice place in Summerlin, our Summerlin area.
Summerlin's nice. That's where you live, isn't it? You're out in that area.
No, I like the center of town.
Oh, I see. You used to be out there anyway.
I got to get from a freeway to go northwest, southwest,
right,
east, west.
I've got to have you on the real estate show. Why? Because you're such a knowledge and you have, experience in a lot of different areas. So next time I come out, you got to promise me to come on the Las Vegas Real Estate Show.
You got it.
Okay, excellent. Gail, thanks very much for coming on. Once again, giving a great information to the listening audience that we have, and I appreciate it once again.
My pleasure, Jeff.
Okay, that's Gail Whiting from Capella Mortgage. Oh, Gail, shout out your phone number quickly, will you?
702-503-3252.
Excellent, and that's her phone number. So if you're thinking about one of these great programs or moving out to Vegas or just checking out the marketplace, she's a terrific person to call for Capella Mortgage. This is Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. Pick up the phone, write it down, remember it. Call us with a question, a problem, an answer, a solution, something you want to say. And, before I go any further, we do this television show out in Las Vegas. You've heard me talk about it, and it's called the Las Vegas Real Estate Show. So, the reason I bring this up is because it is a first for me, and I'm sure anybody who's in social media a lot or anybody who's on television or radio or any other medium which is broadcast or put out there in the public sector, even my YouTube channel. This is a first. I had a complaint about the TV show. Daryl, I want to ask you about this. So,
okay, I'm ready.
Okay, so the guy says to me, "You're too political on your show." This is the real estate show, which is very much like this show, which I talk and, I have a guest and that's about it.
You're too political, or you took the wrong political opinion, and if you would have agreed with him, you'd be okay.
I think that's what he was trying to say. But what he said was, you are another of the Trump haters. Now, do you remember me ever bashing Trump?
No.
I just...
In fact, I think you've said that the economy has done well.
Right.
And you've never really attributed it directly to politics, but the correlation has been a positive correlation with the current administration.
Right. I think that's what it is. I think what I try to do on the show, now, if politics is not your thing and you don't want to hear about it, I totally understand, because you know what, everybody gets wrapped up in fighting, and I've been on Facebook and LinkedIn and Instagram and any social media. You can pick a fight in about 2 seconds if you just say the wrong word. So that's not what this is about. But credit due where credit's due. Issue with policy or personality that affects your ability to go out there and get a mortgage. And that's important to me.
How in the world can you discuss real estate without discussing the economy, and how can you discuss the economy without discussing politics?
It's all intertwined.
It's all tied together.
It's all tied together. On the local level, I have a friend of mine who was elected mayor recently of where I live over in Malibu, California. Yes, I know. I'm living with the stars. Actually, we bought the house really inexpensively many, many years ago, and it took me a long, long time, but I finally paid it off. Another story, another day. But he was elected recently. Now, Malibu had, like many cities in California, certainly San Bernardino and Riverside, all the fires that you've had out there, the mass shootings, anything that speaks of disaster, your local people at the Board of Selectmen, your mayor, your city council, all these people have to get involved. So he's involved with Malibu since the fire. And because of that experience that he's going through right now, he told me, he said, you know what? You cannot please everybody all the time. And you've got to really look at what the situation is and call it as you see it. And the old expression, let the chips fall where they may, that's kind of, you have to grow a thick skin. I don't have a thick skin. I got one complaint and I haven't stopped thinking about it for 3 days. So I appreciate you listening out there. And if you do have a complaint, I'm kidding, of course, you can absolutely get in touch with us, because we'd like to gear the show towards what you all want to talk about, even though I know within the scope of what we're talking about, most people in the marketplace have no idea about some of these aspects: secondary market, different programs, non-QM, all the buzzwords that we talk about in the industry, which we try to simplify. Why? Because it's confusing enough. I'm going through a number of state audits right now because Malibu Funding is in 10 different states. And as my position at the company of Malibu Funding, who again sponsors the show, thank you very much, I have to deal with state examiners all the time. So a couple of states send in their questionnaires, and it's a long, involved process. And the fun part is I have to pay for their examination. So we want to make sure that the documentation is thorough, that it's complete, that it's as much to them as they can get. And again, that's what happened. So one of the states sent me a questionnaire to fill out, and it was, when we started, it was about 30 fields on an Excel spreadsheet. Everybody who deals with Excel know what a pain that is to fill in those little boxes, and you're trying to figure out a program to auto-populate, but it doesn't work. So in filling out all of these little boxes, every time you would hit a yes/no answer in the little box, it would give you a list of another questions. So now we're up to 100 questions, and this is for one loan we did in the state of North Carolina. Now, I love North Carolina, love the people there, but when you're dealing with, and I know what it's like to deal with documentation and reporting, when you're filling out your loan app, when you're giving income documentation, when you're getting the 17th request of more information from your lender, I really understand the frustration that you'll have, because nobody wants to be treated as if they're just a number, an entity, a something that really we can take or leave. You want to feel as if you're special, especially if you are about to make the biggest decision financially that you're ever going to make. I mean, let's face it, $500,000 is the median price out in San Bernardino and Riverside. That's a lot of change. If you go back 10 years when we were in the mortgage meltdown and you looked at what the median price after 2009, 2010 was, about $150,000 to $200,000. So we've gone way over double the amount of what the median home price is in those areas. So as you build your esteem through the amount of wealth that you have, that's just the way it works in capitalism, that's just the way it works in America. The more you have, the better you feel about yourself. At least that's what they tell you with all the ads and people, jetting around the world and have exotic drinks at a beach locale somewhere. This is the image, the thing that we're all trying to push for. So I really understand when a lender asks you, okay, you gave us this information, you gave us an explanation letter, but what we need now is, and everybody who's had a loan or more than one has experienced that. Just like my audit with the state of Illinois, not Illinois, but North Carolina, I totally and really respect the difficulty and frustration. You want to find somebody who understands that. Doesn't need, you don't need hand-holding. You don't need somebody to cry on their shoulder. However, you do need someone who understands and respects the fact that you're about to borrow at least $500,000 in most cases. That's something to respect. If you have the ability to do that, and you have the wherewithal, and you also have the desire to do that, good for you. We talked about income earlier in the show. We talked about retirement a little bit, and now we're talking this, which is basically the frustrations that you have during the loan process are only worth it when you get that loan. And 2 weeks after that, you won't remember a thing. Why? Because as all things difficult, raising kids, starting out in life from college, I have 3 children right now, all in that 20 to 25 age group, all trying to get their first jobs, real jobs, not like, I'm working over here at the pizza joint or I'm delivering computer parts, but I mean a real job in a profession and something that you want to be able to, have for the next 10, 15 years, although I'm not sure if the economy's geared for that anymore. But I understand the frustrations. I understanding the work you put in order to get into that house, and finding someone who understands that, who understands you, and be able to guide you through the process at the same time, working their tail off so that you minimize these requests for additional information. Now, there are a lot of programs that don't require huge amounts of documentation. It's going to cost you more because they're what they call the non-qualified loan. However, and we were lucky to have a couple of guests on today talking about that. You can certainly get that if you want to go in that direction. There's a lot of things that happen during the loan process. Patience is absolutely necessary. Let's get a quick update into what your rates are going to be today if you actually locked your rate today. We can have FHA rates at 4%, 30-year fixed rates from 4 to 4.125%, 15-year at 3.875%, and 5-year ARMs at 3.875 to 4.25%. These are all great rates. They seem to be holding steady, even though we've got this issue with China and the trade and all that going on. Anyway, I'm Jeff Barton. I'm your host and your voice for the Mortgage Voice. Thanks for listening in, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.